AMC Entertainment Holdings. This income statement shows that total revenues have nearly doubled in just the last 2 years. So has your average shares outstanding. Stick around to dive deep into that with me, but also to see the proprietary Sage Seeds artificial intelligence ranking at the end of the video. We're going to start by actually looking at what the auditors of this annual report said, rather than what the company published. Ernst & Young only bringing up one critical audit matter, an impairment of long-lived assets. Whether these fairly large numbers are or are not accurate does directly impact the quality of every other decision built atop of this foundation. Could be like ignoring your car payments for 6 months. It doesn't necessarily shatter you financially, but you're certainly not doing the version of you any favors that lives 6 months in the future. The auditor putting their stamp of approval onto it, which is definitely worth keeping in mind as we get into the details now. This is a legal admittance that movie theater changes in Alabama, Colorado, District of Columbia, Florida, Georgia, yada, 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 good chunk of all the US states, as well as Germany, Ireland, Italy, Portugal, Spain, Sweden, and UK. All of these places, all of these cultures, but people everywhere genuinely not wanting to go to movie theaters as much as they did before. You would have been seen as crazy if you suggested this would happen 10 years ago. This over 100 million recent reduction in expectations is just the latest of an increasingly long line of pretty sizable impairment losses. In fact, back in 2021, the first full year after the economic lockdown's impact, impairment losses were actually smaller than every year afterwards so far. That does mean that management must be starting to genuinely feel a bit silly, because impairment losses are definitely not something that you want to be following trends for. These are meant to be one and done, but better just to get over with right away. And it's a bit ridiculous to be in this position when it's the main source of income for your business. Naturally, this is why the financial office spends a good amount of time right in note 1 talking about the section liquidity. Since creditors are understandably nervous, the pressure is already mounting, with AMC being subject to a minimum liquidity requirement of 100 million. And so that does make things harder, because AMC is well past the point of being able to lean on creditors or overdraft their accounts. The cash burn rates are not sustainable long term. If any part of you was convincing yourself that that is not the case, here is the company's own legal admittance. The rest of this is describing that there is not even a chance that this company survives unless revenues grow substantially. Before this section is up though, the really special moment in time we're living through, second lien notes due in 2026, this problem was almost magically completely eliminated, thanks to being able to exchange over 14 million shares of the company in order to repay this debt. That not only eliminates the interest payments and the ultimate collection of the notes, but because it was done early and at relatively good prices, it essentially counts as an almost $30 million boost to cash flow. That means that the tens of millions of dollars that investors in shares of AMC Entertainment did provide over the last couple of years did have a very real, tangible, potentially trajectory-changing effect. And so whether you label this a meme stock or not, the fact is that AMC is literally drilling hundreds of millions of dollars out of public equity markets. I genuinely don't think even the Apples or Metas of the world could be given such favorable terms from stock market exchanges. In fact, both those examples, I just recently made videos explaining how they're in the opposite situation, in which investors are very impatient. People want AMC Entertainment to win. The management rightfully taking some credit for the Taylor Swift Eras Tour and Renaissance film by Beyonce. Very successful, I would argue, brand new, never tried before products. Going way back to the beginning of this episode, it definitely isn't an accident that AMC Entertainment has seen its revenues almost double since 2021. The second strategy being tried by management now for the first time is selling the land and buildings in which the theaters are housed. AMC Entertainment can be thought of as starting up a bit of a real estate side hustle. Not something that I can tell that they've focused on before, but that if done properly is genuinely the right sort of move to be trying right now. It would remind me of what happened to Sears stores, which we saw together in the 22 season, I believe. Now then, the elephant in the room is this issue of share issuances. This is the best they've been able to do while receiving literally $790 million in a single year from share issuance proceeds. And time is definitely not on the side of any business plan that requires these insane levels of good favor from strangers. Finally, in a selected financial data prepared by the management's office, I just want to note that food and beverage costs for the latest year are actually higher than they were in 2019 before the economic lockdowns. More importantly, the profit margin on food and beverage is lower right now than it was pre-pandemic. Apparently, we actually still have room to see food and beverage get even more expensive at movie theaters, given that the revenue is definitely rebounding. It was even more expensive a couple years ago. Looking at the earnings per share for the last 3 years, AMC Entertainment is making very fast progress back to a profitable state. But please remember, 9 out of 10 times, something like the economic lockdowns would kill a company like AMC Entertainment back then. I do want to guess the ranking though. As an investor, I have a very uncomfortable feeling in my stomach as I'm reading through all this, but also a genuine admiration. I am very much not used to feeling both these things at the same time. And so my instincts kicking in to tell me to be conservative, I would guess that this ranking is going to fall between the 80th and 90th percentile, remembering that a ranking closer to the first percentile is the best. I'm pretty pessimistic. But what do you think? AMC Entertainment is ranked in the 94th percentile for the 2023 season. Very much a part of the group of increasingly desperate companies at the bottom of the ranking. Do you agree with a ranking that's this low? I would love it if we could get a discussion in the comments going about our favorite underdog stories, the in-person experience, maybe even the role that nostalgia factors into all of this. I have to admit that I keep thinking about how in the 80s, nostalgia came out of nowhere to save movie theaters. It's literally happened once, almost half a century later. Could it happen again? Please also like and subscribe so that I can continue making videos just like this one. And thank you for watching until the end.